Friday, February 10th, as the financial market copy nearby says, as absolutely incredible as it may seem, nothing that's going on is having any particular effect on financial markets. Now, maybe at some point the new administration's activity will have an effect on markets, but not yet. One of the big things that was supposed to happen very quickly was the repeal and then probably replacement of Obamacare. This week, maybe next year. In the financial markets, watching interest rates, watching a local real estate market, trying to keep track of just investments in a stock market portfolio, you can't not pay attention to the President of the United States. And yet, the experience in the last 3 weeks is like being followed by someone holding a trash can lid in one hand and a golf club in the other, and just as you're beginning to think constructively about something complicated, whang, right behind your head, and you have to stop what you're doing and try to figure out, is something happening that matters to my clients, to the markets, to whatever. And the strangest part of the experience in 3 weeks is that nothing's really happened. There are things out there that are pending. The economy's doing fine. There is no American carnage of note. There's some tough economies in some local markets and people who are bad hurt. But the economy itself is growing a little bit better than it was, significantly better than it was a year ago. It's running between 2 and 3%, which is a level fast enough that the Fed has to continue to raise rates. So in the financial markets, everyone is waiting for the next rate rise, which is ultimately designed to remove stimulus from the economy and to see what sort of reaction that might get from the man with the trash can lid and the golf club. Another Fed governor announced that he is resigning this year, which means there are 3 empty seats out of 7. Chair Yellen, who was criticized during the campaign, her term is up early next year, a year from now. And Vice Chair Fisher's term is also up. That means in the next year the administration will nominate 5 of the 7 replacements, possibly a new chairman. And there's a lot of just waiting to see what happens in the marketplace. A lot of stuff going on overseas is all unhappy for Europe, China, and Japan, but good for interest rates, and in a weird roundabout way, good for our economy. But mortgage rates still sitting in the low 4s, very little movement, just fibrillating, trying to figure out what the hell is going on. We've been stuck in the same place now for almost 2 straight months after the rocket ride upward the day after the election. There we have it. It feels active out there, but there's nothing happening. Have a nice weekend.